In a risk-off environment, the price of asset classes which you would normally want to hold for the next 5 years, which is to say precious metals as an example, gold and silver, get soft. The fact that a company, that is to say an investment that you know well and feel good about, is becoming less and less expensive is a benefit to you.
From an investment perspective, precious metals have been a coveted commodity for a long time. Silver and gold are highly sought after, not only for their brilliant beauty, but also because they're a lucrative investment option. Although as an investment, silver is not as popular as gold, it's actually a smart and practical investment these days. Precious metals are considered a good way to diversify the portfolio and hedge against inflation. But gold, perhaps the best known metal, is not the only one available to investors. In today's video, we'll tell you what Rick Rule has to say on owning gold and silver and how you can get mega rich. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. We think the fun game of money can go on for quite some time. We don't think the average investor and saver in the US is as scared as he or she is going to become. Bonds can be oversold because although we think they offer a horrible value proposition, others see them as safe havens, regardless of the math. So in the very short term, we could see a recovery that looks like rising interest rates because of some very bad things in the debt and equity markets. So if you own a 10-year US Treasury that you bought a year ago at a yield of 125 basis points, and today the 10-year US Treasury note is selling at a yield of 225 basis points basics for 10 years, that means your stream income is worth a lot less. You need to have some cash because cash will give you the tools and courage to handle volatility. Normally, you would like to hold for the next 5 years, i.e. precious metals, or like gold and silver go soft, and if you don't have the courage to believe. If you buy a stock that you think is worth using a large cap stock, let's say you think something is worth $50 and the stock is selling for $40, and you plan to hold the stock for more than a long weekend because you think the prospects for the business is such that it will do well for the next 5 or 10 years. The best thing we can do is become extremely conservative, that is, have cash, have precious metals, and have very, very low expectations. Or maybe just pay off our debt and back off. Precious metals offer unique protection against inflation. They have intrinsic value, carry no credit risk, and cannot be inflated. This means that you cannot print any more. They also offer true disruption insurance against financial or political military disruptions. From an investment theory perspective, precious metals also offer a low or negative correlation with other asset classes, such as stocks and bonds. This means that even a small percentage of precious metals in a portfolio will reduce both volatility and risk. The best way to invest in precious metals is to buy the metal outright and maintain its physical form, or buy exchange-traded funds, ETFs, that have significant exposure to precious metals or companies involved in the precious metals industry. Gold and silver are particularly popular commodity investments, largely due to their historical relationship with money. Governments once used gold and silver to make their currency. Although no major economy uses gold or silver as the basis of its currency anymore, investors still view these two metals as active stores of value. Silver is more volatile, cheaper, and more tied to the industrial economy. Gold is more expensive and better for diversifying your overall portfolio. Either or both can have a place in everyone's portfolio. You might think that gold and silver are not doing well from the last couple of years, so there's no point to invest in gold and silver. But time will come when you will regret that you don't have gold and silver in your portfolio. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.